Hi, everyone. This is Victoria Rutherford from Adelaide Capital. Today, I'm here with Silas Garrison, the CEO of HS GovTech. Hey, Silas, how are you doing today?
I'm good, Victoria. How are you doing?
I'm good. For those of you that are watching the webinar, I just wanted to let everyone know both Silas and I are traveling and in Wi-Fi, not great places. So if there is a bit of a glitch or if anything happens, please just bear with us. But with that, so Silas, a lot of the audience, is familiar with your story, but there probably are a few new people on. So would you maybe take a minute, run through the slides quickly and just reintroduce HS GovTech to our viewers?
Yeah, absolutely. I'd be glad to, Victoria. So let me pull up the presentation here. All right. So, well, thank you everybody for joining in, especially for those of you who are existing shareholders or just familiar with the story. I will keep this fairly brief and tight. For those of you who have not heard the story before, we're HS GovTech. We're a SaaS solution focused centrally on, as our name implies, the governmental market. More specifically, and very nichely, in fact, is the fact that we focus exclusively on local government, and more particularly regulatory agencies that operate on a local level. What is local government? It's anything from county to municipalities, towns to cities to even state or province level, but really all generically known as across US and Canada, local government. And we focus on regulatory agencies that really conduct permitting, inspections, anything in the kind of realm of health and safety. They issue an invoice and they conduct regulatory work. Everything that they do, our software is to enable to make more efficient. So we're a fast-growing SaaS company that's focused on the governmental space. But what does that really mean? Well, we're focused on helping government agencies operate more efficiently. We offer a suite of products, fully cloud-based solutions, and really not just that our mission is helping government operate more efficiently, but our solutions are tailored on what we call beyond data management. So we have a back office data management solution that helps streamlines every part of the day-to-day work lives of these regulatory agencies, such as a health department. Environmental health departments are these agencies that a lot of people are familiar with. They regulate restaurants. So you see them maybe on the wall of a restaurant, a health score, sanitation grade, things like that. But more particularly, we serve these agencies by offering them cloud solutions that not only automate and make more efficient their day-to-day lives and the back office, so to speak, but we also take that and extend that power of cloud-based tools into the citizen realm, allowing them to actually share information online by allowing them to engage with their citizens and create efficiencies in the whole kind of bureaucratic life cycle, from application from a citizen to open up a business, to issuance of a permit, to the renewal of that permit yearly, down to the actual inspections that are conducted by regulatory inspectors. As far as a bit of a background, we are on a growth path right now. We're looking to get to 10 million in ARR, up from, as at the most recent announcement just 2 days ago, at 4.8 million in ARR. So we've seen a lot of growth, a lot of demand over the past couple of years, and we're going through the pandemic, but a lot of that is shown, both the agencies that we serve and also the customer market abroad, is that now is the time to actually adopt a cloud solution. And I'll get into more of that as we also go into Q&A with Victoria. But this is a look at some of our customer logos. We serve agencies both large and small. One of the things that I'll call attention to, and this is important for both those that are new to the story and both that have heard the story many, many times. We serve government. That's pretty obvious to figure out. But this slide right here, I call it the most impactful and meaningful slide in our presentation. And there's one simple reason. Government is a follow-on buyer. We have now penetrated most of the provinces in Canada in terms of having customer penetration representation, over 30 states in the US, which keeps growing. And with that, we continue to see more and more demand from the areas that we already have penetration. Just most recently in our Q2 sales update, California, Colorado, all these states where we have existing customer bases, we're adding to them existing customers that are actually spending more money with us. So this slide right here, If you really take a look at it, this is where you're going to see the majority of our growth in, where the dark blue is, but we're also slowly tacking on, or really quickly, it has, as over the past couple of years shown, more and more states and more provinces. And that's just going to build up more sales momentum as we continue on. As I mentioned, we offer a product suite that is fully cloud-based. And the four pillars of it really centered around a core central platform that is kind of the back office solution that I mentioned, HS Cloud. This is where every single user who is a customer of ours, so whether you're a field inspector working at a health department, or whether you are a actual managerial person, an accountant at a health department, you're going to log into HS Cloud every single day to basically conduct every part of your daily facet, your work life. Off of that, we have those four pillars, right? So two products that are included with a base license for HS Cloud, My Health Department and HS Touch. HS Touch is our mobile app for field inspectors to utilize. It's iPad, Windows tablet enabled, so that they can go out and use a lightweight device to conduct their regulatory activities. My Health Department is citizen engagement portal. That is what I talked about, that beyond data management notion that we actually help these agencies not only collect and track their information, but expose it to their constituents, to the citizens that they serve. GovCall and HSPay, those are additional revenue drivers. GovCall, it's a teleconferencing platform born out of the pandemic that we just went through, but the need and really the accentuation of the idea that these regulatory inspectors can conduct their work from their office through a video conferencing call is a notion that not only was brand new in terms of the pandemic, but something that is growing in popularity and demand now that we've largely passed that phase of our lives for a lot of us. And GovCall is a premium feature. So we charge an additional licensing fee over and above our standard fee for HS Cloud. And then we have HSPay, which we'll provide an update on for existing holders here during this webinar. But HSPay is our online payment solution. It simply just tucks right into our entire product suite that you see here on screen. And HSPay, we are able to take a clip of revenue from every single payment. So as I mentioned very quickly, that the majority of our customers, what they do is they collect applications, they issue permits, conduct regulatory inspections, but they also have a billing component. They utilize our platform as kind of an accounting platform. Now, doing that means that they issue these invoices out of our system, but collecting that payment back prior to us introducing HSPay was largely done through just checks in the mail from citizens. So that all being said, what we've stood up late last year and just getting it rolled out into the first dozen agencies or so is HSPay, which allows us to not only facilitate online payments for our customers, wherein they had no former online payments, we are able to take a clip of that revenue, somewhere in the neighborhood of a half to a full 1%. Our current customer markets are collecting hundreds of millions of dollars a year in terms of licensing and application fees every single year, and hundreds of millions of dollars is coming through snail mail, checks in the mail. And so we're able to now displace that old way of paying for citizens, which is a real big win for them. It's more of efficient. And for these government agencies too, no more bank deposits, check runs, and things like that. So that's a real quick recap. And Victoria, I want to just kind of cut there because I think the Q&A will provide, especially for those that are new to the story, a lot of additional insight that they might have on the back end of that.
Okay. Yeah, no, that's great. So I do want to remind the audience that there is a Q&A box at the bottom of your screen. I'm going to kick it off with some of my questions, and then we'll just go from there. Silas, for the people that are watching that are new to the story, would you be able to briefly just describe what the competitive landscape looks like, and then what makes HS GovTech so unique?
Yeah, I'd be glad to. So the competitive landscape, it's all government centric. And when you look at government, a lot of people, the first big question that I get from those who are really new to the story or just new to really GovTech in general, the GovTech industry is, what about the big players like Oracle or things like that? And really what you're focused on is not so much an Oracle, but a couple of companies that you may or may not have heard of. Excella, which is a private company, it's private equity backed based out of California. And then another one that is publicly traded, Tyler Technologies. It's based out of Tyler, Texas, as its name implies. But they're publicly traded on the New York Stock Exchange. They've got a TYL as their ticker symbol. Both of these companies, financially speaking, are sizable competitors. From a product differentiator standpoint, from a customer reputation standpoint, we are standout. From a tech standpoint, there's really no other direct head-to-head competitor that has the software platform that we do. Ours is unique, powerful, and compelling from really a few base reasons. One, it's fully cloud-based. Two, it is also fully configurable by the end user, meaning that you don't have to have specialized programming skills to set it up and deploy it. And then the other part of it is that it is very nimble and it evolves with an organization. We have a saying in our implementation process, which is we believe that software should mold and bend to the way that you do business and not the other way around. Too many agencies that we work with, customers that we serve coming from these competing platforms, have molded, bent backwards their business processes just to meet how the software functions. And that is a large reason why we are seeing customers leave Excel, leave Tyler to come to us, because we're providing a platform that is just that much better. It's modern. It's fit for the day and age in which we live. It's a product suite. We have video conferencing, payments, not to mention our full HS Cloud back office solution. So yeah, that's really where we sit in terms of the competitive landscape and what makes us new or unique in terms of the product differentiator. But I do want to call a special attention to the customer service aspect. And that is when working with government, it's a relationship game. The strength of your business is built upon your relationships. And the foundation of that for us continues to grow and our reputation continues to precede us. Something I'm very proud of, and I'm very proud of our team for that. Because we pour deeply, we care deeply for our customers, and that's what inevitably is going to continue to attribute to our very aggressive growth as we move forward.
So when you're running up against these guys and bidding head to head, typically what's the outcome of that process?
Well, in our favor is the good short summary to that. But yeah, we go head to head in a lot of bid situations, which is interesting to kind of call attention to that in terms of how the sales process works. Is the majority of our customers come via way of just sole source, direct contact with the government agency. They see our solution, we present it, and we close the deal without having to go through a competitive bid, an RFP, request for proposal process. For those that do, we do see both of those competitors that I mentioned, both Tyler and Excella, typically in every situation, almost every situation. And to this day, we are batting over 90%, 95% plus run rate on all of our bid submissions. So it's a very comfortable position where we sit from that perspective.
Can we talk for a little, for a minute? So you've recently changed your name to HS GovTech, formerly Health Space. So what drove that change?
It's a really good question. And there's a couple of reasons why we went with a name change. One, I took over running Health Space, as it was known, in 2018. And when I took over in 2018 as CEO, our technology was brand new. We had just rolled out our cloud solution, and our cloud solution was new to the industry. We were formerly known as kind of an older style tech provider, very good reputation on the customer service front, but older tech style. And so in re-educating the markets, which is really what led to a lot of our most recent couple of years of growth, what we realized is that the customers that we were serving, the opportunities we were finding ourselves in, were far beyond just the sliver of health, as our name implied. And so really getting out of that very niche feel of calling ourselves Health Space into HS GovTech, GovTech being the sub-market of all of tech that serves the governmental space. It makes a lot of sense for us. And, just late last year, we got into our first fire department, our first fire agency. And when you're calling upon fire departments, as we intend to do, Health Space is not a name that really resonates as too relevant to fire. So for that and a lot of other reasons, it was just the right time and the right juncture for us to go ahead and make that switch from a marketing perspective.
So you're increasing relevancy and minimizing confusion.
Definitely minimizing confusion. I cannot tell you the number of, both customer but especially investor conversations I get into that they instantly think we're a health insurance provider or some sort of marketer for medical use. And it's just, far from that. So the name implies HS GovTech is a much stronger, well-positioned name for us.
Well, the new name seems to be working. Q1 looked really good this year. And then you guys just, released a pretty strong sales update for Q2. And I think you mentioned that this represents the largest quarter in the company's history in terms of total number of deals, but also in terms of total contract value. So would you just be able to walk the audience through the release a little bit?
Yeah. So one, it was the most significant in terms of number of contracts signed, but also total contract value, TCV as referred to it, in the company's history. Something that I'm very, very proud of. I've talked a lot about the market momentum we have seen on these webinars over the past, year or two. And, we're hitting that inflection point now coming out of COVID where the deals are just falling like dominoes, it feels like. So we closed 6.05, so basically 6 million in TCV of total deals. Now our deals are broken into kind of two separate factions. If you look at the press release, what you'll see is that we have fully executed agreements, which was 2.19. Those are contracts that we have in hand, fully executed both by us and the end customer. And then we were awarded another 3.86 million in TCV of total deals. Now, awarded means that we've closed the deal. The customer has agreed to, our pricing, and that deal is moving forward, but it either is, waiting a final contract signature from accounting or the contracting department, whatever it may be. It may be 2 business days, it may be 2 weeks, but that's the way that we break down our deals. But total deals awarded and closed were 6 million. That brought our AR up on the fully contracted up to 4.82 once we actually close out those awarded deals, because we don't include them in our contracted ARR. But once they close out over the next month or so, that will bring our ARR up to 5.2. And so one of the reasons that we include the awarded is one, past precedent. We've always actually announced our awarded deals on an individualized basis. Now we're kind of providing an end of quarter release to keep the market apprised. But two, those awarded, one of the things I want to call attention to is the fact that we have at no point in time ever been awarded as many contracts and as high a dollar figure in a singular quarter in the company's history. And that's going to really bleed into Q3, where you're going to actually see the sales closings, the ARR, and the actual revenue come in the door starting in Q3, which is just going to really push that momentum forward. And kind of looking forward to Q3, we're already anticipating it being stronger than what Q2 was, which was a record-setting quarter for us.
Wow. Well, that goes right into my next question about visibility in the back half of the year, but it seems like it sounds strong and good. So I'll skip that question. Also, you stated in the Q2 release that all of your new contracts came in from environmental health. So essentially, that's your home base. So what's the opportunity that you're still seeing within this segment?
Yeah, environmental health is a really big market segment. And it's also the kind of low-hanging fruit for us. When you are tackling a government sub-industry like environmental health, and others that we've broken into like fire, there's 3 things that matter the most: is customer service reputation, or just customer reputation, your tech, which we obviously have in spades. But 2, it's also being kind of an SME for the customer and understanding the market space. And to establish any sort of market dominance, you really got to build up that SME component. And that is what we're doing right now with Fire. So Fire, being that we closed our first sale in late 2021, we are just delivering on that with Anaheim. We have a few others in the hopper in our sales pipeline that are in the Fire realm that we anticipate closing this calendar year as we work through them. But beyond that, our environmental health market segment, we are SMEs in that space. And it means that we can actually engage with the customers on an easier basis. We have a bigger customer service reputation, just a customer footprint. So we're going to see all of our near-term growth, the majority of that, come out of environmental health. And this is no small market. Over $100 million ARR TAM is available to us. And a hefty segment of that is up for grabs, so to speak, over the next 3 years, as a lot of other agencies are rolling off their contract within a competing vendor expires over the next 12 months, 24 months, 36 months. So if we are taking from an existing vendor, kind of a competitive steal, we typically have to wait for that contract cycle to end out. And so over the next 3 years, you're going to see us really just absolutely continually dominate the environmental health segment. So that's what we call attention to. But now we're building up reputation and SME base in fire. We have agriculture that we've actually penetrated into 2 states. We have other areas like public health, clinical health that are just additional ancillary add-ons. But I want to make mention here, especially for those who are new, or just as a reminder for those who are familiar with the story, that the ultimate vision for us is to become the de facto cloud solution for regulatory agencies that operate at a local regulatory level. whether that be environmental health, whether that be fire, the 5-year kind of roadmap for us is to be the de facto solution, much like Salesforce did with CRMs back in the early 2000s. We can revolutionize how government approaches buying cloud solutions. And that is the ground game that we're on. And environmental health just happens to be the first big launching point, but it doesn't stop there.
I noticed in the release that you didn't disclose your sales pipeline, which is something you normally do. Was there any reason for that, or?
So our sales pipeline, which over the past couple of quarters, past 3 quarters, I do believe has been in and around 25 million. It went from 20 that we disclosed, 22 to 25. And quite frankly, the sales pipeline still hovers at around just over 25 million. And what we say is near-term opportunity. We've always classified that in like kind of a 12 to 18 month time frame, because it's hard to pinpoint with exact precision how or when a government agency is going to close, but a 12 to 18 month time frame. We just closed out 6 million in deals. Q1, we announced that we did 3 million in deals. And so right now we're on a trajectory. We've almost closed as many deals in just the first 2 quarters of this year as we did in all of 2021. So what does that say for our sales pipeline? Well, to continue to reduce it, update it, revise it, starts to become a bit of a distraction from what we're really doing, which is moving our sales forward. And so it's an ever-evolving, ever-growing sales pipeline. And when we close a deal, we reduce that. We're usually backfilling it with a couple of more deals. So right now, it still stands at over 25 million in terms of near-term visibility, but it's something that really the proof is in the pudding, and closing out a $6 million quarter with anticipation that Q3 should be even stronger is really where we're going to start to draw the attention and narrative for the investor market.
In that pipeline, I know in the past you've mentioned that you have some pretty sizable, contracts or potential deals that have been sitting in it. Do those still exist?
They do. Yeah, we have a number of deals that are sizable, and I'll leave it at sizable. But they are within the realm. If you've looked at this company with some due diligence, that a good sized contract for us is in the low 7 figures. And so we're definitely having deals that may accelerate into middle of the pack in terms of 5-6 million. But really, all of those are kind of what we call like RFP stages. And so those, when they get to that size, they're definitely going to go to a bid situation. It's just procurement laws. That's just how it's going to be. And so we do have deals in our pipeline that are there, that are active. And I'm very excited and very confident where we stand in some of those.
That's great. I'm going to flip just quickly to a few of the audience questions that have come in. So you have a lot of customers. With regard to future growth, how much growth do you expect from new customers versus further penetration of your current customers?
As we continue to grow, and that's why I really wanted to accentuate that slide, because I felt like a question like this might be posed. When you look at that slide in our presentation that has the coverage of the US and Canada, I mean, that really explains it in a nutshell. We're going to have a really healthy blend of existing customers paying us more revenue, as well as brand new net revenue, I should say, as well as new customers coming on board. In fact, almost 50% of the contract representations in Q2, that $6 million, was 50% actually was coming from existing customers, whether that be a contract extension to add more modules, more user seats, or a customer actually extending their usage into another area of their department. Whatever the case may be, we're going to see a continual healthy blend of net new customers that we, never mentioned their name before. They've not been in our Rolodex, so to speak, as well as, existing customers to continue to drive more business our way. Areas of California, Colorado, Texas, or just to name a few, are areas where we continue to drum up more business from agencies in those regions. And that is a trend that we're going to continue to see, or anticipate we'll continue to see over the course of the next few years, because once you sell an agency and they become kind of addicted, so to speak, on one module, utilizing it in one use case, it's very likely that you can sell them to utilizing it in an additional.
And then what's the biggest challenge you face in acquiring new customers or expanding existing customers, and how are you overcoming those challenges?
There's really no immediate obstacles in terms of acquiring new customers. Right now, we have a very healthy sales force, a team that is well tooled into the industry. the industry is largely positioned to look at us as kind of the de facto leader in terms of the preferred solution, at least speaking in the environmental health market segment. So not a lot of headwinds there. Really, it's all about, it becomes about continuing to deliver for the customer and maintaining that customer service reputation. So you maintain that kind of front runner position. And the only impediment to that is really our ability to deliver our implementation. And as I've talked about in other presentations, when we talked about like our headcount accelerating and things like that, we're going from 18 people 2.5 years ago to, over 90 or right around 90 today. What that really accentuates is we've poured a lot of energy, a lot of resources into reducing our implementation time, reducing our implementation complexity, because every one of our customers, as kind of a reminder for those who have heard it before and for those who may are new, every single customer of ours, our platform is extremely easy to use. It's very powerful, very configurable, but they still need an element of consulting and best practices and just a lot of help when it comes to setting up that software initially. That's what we call an implementation. And the implementation is the biggest lift. It is the area that will continue to refine the most. And that is, if you call it a challenge, it is the one area that we are focused on the most because it is the secret sauce to actually scaling.
Could we get an update on HS Pay and the payment side?
Yeah, so HS Pay, as we mentioned just a moment ago, went live at the end of 2021. And we onboarded our first dozen customers. We've onboarded a few more here in the past couple of months. And right now, we've already started to see somewhere in the neighborhood of a couple thousand transactions come through that pipe, but we've not seen the volume that we anticipate being built up over long term. And that's because our focus really is on adoption. And then after adoption comes, really the penetration, the saturation of, educating the citizens that you can pay online, working with our customers to better present their invoices in a digital format so that it makes it very easy for the end citizens to consume and they go click a link and pay. So we're working through that phase of adoption right now. So we're not reporting the revenue from HS Pay at this time, just because, it's blended within our other parts of our revenue. But in the coming couple of quarters, we're working on breaking that out as a separate line item segment in our future financial statements. But at this time right now, we're just focused on adoption. A couple thousand transactions, a little over, we've been able to process, but that volume is going to pick up rapidly as we continue to both the co-education with our customers and the additional adoption within our customer market.
And so an audience question that ties well into it, but why are governments still using, mail and checks versus these online payment platforms? And then how much of your customer base do you think will start converting over and be interested in this product?
It's a really good question. So a couple things I would say on the why does government do what they do? There's no straight line answer. But the best answer I can give you is because they're never shown a better way. And that's one of the reasons why I am so boldly confident in our future growth, the market opportunity that we see that, where we sit today, it's the sky's the limit, right? Because government is spending billions and billions of dollars a year on IT solutions, services, and very seldom are they really given the cream of the crop. They're usually having to pick from the litter of older style technologies and things that really do not propel them into the modern age. We do propel them into the modern age. And so when given a choice, they do and will make the choice to make themselves modern. They just have to know about it. And that's the most direct line answer I can give you. As far as the penetration and the adoption, anticipation of HS Pay, over the next 3 years, I would anticipate somewhere in a 70 to 80% adoption rate for HS Pay. It takes a little bit of time to clear it with finance, and then they have to figure out, okay, well, now we got to steer our payments into, an automated deposit account. How does that work with our, cash reconciliation process? There's a lot of things in the background that we work through with our customers on. The bottom line is, I would say over the next 2 to 3 years, we're going to see upwards of 70 to 80% penetration into our existing customer markets on HS Pay.
Yeah, it seems like it makes so much sense, and that you would think that they would be doing it already. It's almost shocking that they're still using such dated systems.
It is. It's one of the reasons I count myself privileged actually working with government, is because not very many people spend their lives pouring passionate energy, as I've done, and a large part of my team has done, just serving the governmental market in a technologically forward way. And it's a very gratifying feeling when you're actually able to work with the situation and actually see the benefits that the platform provides, and kind of this light bulb moment where they're like, I can't believe we were doing it, kind of the old fashioned way for so long. It's just because no one helped them through that. And, that's one of the reasons why the opportunity and just really the gratification from what we do is so high.
So I'm going to switch gears now. I have a few questions just on the financial side. So the first being, would you be able to speak to your cash position and just any initiatives that you guys are taking to reduce expenses and maybe just increase the longevity of that cash?
Yeah, so our cash position as at March 31st was just over $3.5 million US cash on hand. And, we have done a lot of things to extend our cash flow position. One is generate new revenue, right? This quarter proves that. And we're going to continue that trend. And the other way is to also reduce certain elements of cost. And we've done that. We've taken in hand reducing certain sizes of our teams that either had been absorbed into other parts of our team structure or just quite frankly, underperforming. So, we're reducing where we need to, where we can, knowing that there's additional growth. A $6 million, total deal quarter represents a lot of customers that need to be served. And so we are very cognizant of that, meaning that we will serve the customer with the absolute best service we can. And so, cutting just raw cost just to cut cost is not something that we can just easily willy-nilly do because of the forthcoming demand and growth. But beyond that, reducing cost, even in infrastructure, we've been able to bring down over the past 12 months our infrastructure bill, meaning our, how we host our data by over 60% month over month. And so there's a lot of things that we're doing to make it more efficient, to bring down our costs. But ultimately, that ultimate answer resides in what I mentioned just a moment ago. The secret sauce to scaling is implementation, and the secret weapon behind that is going to be our tech, being able to pour more R&D dollars and time into a more streamlined, efficiently making our platform easier to implement, both from our internal team's perspective and the external customer's perspective. And that's going to be the big win that's going to allow us to accelerate our growth without really having to accelerate our headcount.
So that actually leads well into the next question. It's Nadine's question, just asking, about your R&D and what your plans are for R&D into the future. Have you done a lot of your R&D now that you expect to see profit margins start expanding after this? Or do you still have, R&D spend continually on the table, I guess, going forward? Well,
as a software company, as an innovative software company, you'll never see R&D go to zero. If you see R&D go to zero, something's wrong, because you should always be investing in the future. Beyond that, what we have seen is the beginning of the fruits of a lot of the R&D efforts. We over the past quarter, just in Q2, we released several facets, new updates to our product elements to some of our newer customers that allow to bring down reporting time. When I say reporting time, allowing our customers to actually build analysis and data reports upon the information that they're collecting and storing in our system. And we're actually reducing our implementation times. There's a lot of data that backs that up. But bottom line is, one of the things I can financially call attention to is that our professional services revenue, if you look at historically our financials, there was a heavy loss leader. Our professional services cost was not commensurate to our professional services revenue. But we brought up our revenue in a very healthy fashion. And not only that, we've brought down elements and headaches within our implementation process, which reduces the overall time, which reduces the overall cost. And so, if you look at our financials going forward, you're going to see a much closer to break even. And going forward over the coming couple of years, you're going to start to see that actually get into not only break even, but into positive profit margins on the actual professional services.
And then, what are some of the most important key performance indicators that an investor should be focusing on to properly evaluate, how the business is evolving?
Sales and revenue growth, right? I mean, it's pure and simple. It's just like any other business. And we talk a lot about ARR because that's typically how SaaS companies are measured. And it's something that we do call attention to very intently. and specifically for a reason. But overall, our revenue growth, our professional services alone, I'll call attention to that. Historically, it was a very small subset of our revenue. But over the past couple of years, it has really grown, and especially actually over the past year alone, we did over $1 million in 2021 in professional services revenue. And when you look at what we closed in terms of deals in Q2 alone, it added almost 800,000 in revenue just from professional services. So really you have to look at the company on three factors: is, are we continuing to close deals? Does the deal growth, not necessarily consistently quarter over quarter, but year over year, does the deal growth continue to accelerate and expand? If you look at us, it absolutely does. We've done 9.6 million in TCV last year. We're already at over 7 TCV this year, and that's going to continue to grow. And then you also look at the actual revenue that we're reporting, the underlying reporting, and that comes in two buckets. There's our subscription, the software that we sell, and also the professional services that we provide is another significant line of revenue. In Q2, I'll kind of subset and say, in Q2, our TCV grew by 400% quarter, and you compared Q2 2021 to Q2 of this year. It grew by 400%. The total volume of contracts we signed and closed, 400%. Those are the kind of numbers that I would like to call attention to and say those are the benchmarks to measure us by, because our momentum is continuing. The sales growth continues. And in some quarters, it's going to continue in a very, very substantial way.
Of the products and services that you do offer, do you feel like this is a full suite offering for, the government agencies that you serve? Or are you anticipating that you guys still need to add new products or services in the future?
You will always continue to add new things. But as far as a full suite of products that serves the market as it stands today, it is a full suite. It is the most comprehensive, integrated full suite that exists on the market. And I can say that confidently because between the integration we have with our citizen portal, our back office data management with HS Cloud, and you have online payments, you have teleconferencing with GovCall, looking forward, there are things that we're going to continue to add to our platform, but they're more ancillary, they're more enhancements than they are brand new product lines. So as far as a self-existing, fully integrated product suite that exists today, I do believe, at least for the next couple of years, it's pretty well suited to meet the customer demands and the market needs. But never say never in terms of in the next couple of years, a new opportunity or a new innovative way of introducing a product line may exist. But for now, our full product suite is really fully sufficient for the market demands that we are seeing.
And then Silas, I know you've spent some time this spring on the road, attending various conferences and doing some road shows. Would you be able to provide just a bit of an overview of the feedback that you've been receiving?
Very positive. Especially in this market. And one of the reasons why is because when you're talking with analysts and various folks across the investment banking realm, when they are looking at their portfolios, the bleakness of the market, the recession fears, et cetera, they're reticent to even have any hope in any company. But when you talk about government, everybody kind of takes a different dispensation because they know that government doesn't miss its bills, to that government spends more and more year over year, and that really we sell into a subset of government that is even more vital. It is truly classified as vital services to citizens, health and safety. Those fire departments, health departments who do things like water quality, ensure that water is safe to drink, ensure that we have safe food processes, food safety. These are elements that are never going to be unfunded, so to speak. And so we are in a recession-resistant industry and a subset of even further recession-resistant market segments. And so for us, the growth does not match market conditions right now. In fact, we are kind of on this blue sky sailing front where we are very bullish and hopeful for what the next couple of years is looking like, just on what we see and know now, let alone all the new market developments that keep happening. Contrast that with the outside world where everybody sadly is, watching the oil prices and their gas tank and how much that costs to fill up, and watching their portfolio shrink day by day. The internal sentiment and what we saw as a response when I was doing all of my investor travels is that they really got that. And that is what is really, it really provides a really good opportunity when you look at HS GovTech from an investment proposition.
So another question here asking, what's the biggest mistake that you've made and what would you have made differently? You can decide if you'd like to answer personally or professionally on that one.
It's a really good question. One that I will say, I'll answer it this way while I ponder that, because to where my biggest mistake at the top of my mind means I'm thinking about it too much. And so there are many mistakes that I could just conjure up that all of us have, things that we wish we could do differently. But you know, right now, as far as for us as a company, there's no big mistakes other than acting faster to get more R&D out the door. And that's one of the things that we put a lot of emphasis on, a lot of spend over the past, really 12 months. And those are some of the things that I look back on and I was like, we should have done some of those things faster. But then again, going through the pandemic and everything like that, going fully remote from a company that was kind of, mostly in person, so many changes that I don't look back at with a lot of regret. And so there's nothing in the immediate moment that honestly I can think of and say, what is my biggest regret? That's more reserved for a fireside chat and maybe a glass of whiskey. And then I could come up with a couple of them.
Okay, well, Silas, I won't keep you too much longer, but one last question from me. It does look like 2022 is going to be a true inflection point, for your company, and your momentum really is picking up here. So it's great to see. What should we be watching for over the remainder of the year and into 2023 from you guys?
Continue sales growth, continue momentum, new market penetrations, whether it's geographic areas, new states or new territories we haven't penetrated, or new market segments, new utilizations of our platform. But the majority of it is all going to just be all about more growth, closing on the sales pipeline that we've talked about for some time now, seeing that the market tides have finally turned from distraction and delays to fully executing domino momentum. And really for us, it's going to be about pushing out new product innovation. Some of that not super impactful to the customer, to the investor market. They see it and they hear a reporting platform or things like that. Well, the thing that the customer hears is like, this is going to change my life and it's going to make my day-to-day life way easier, way more useful. What the investor market needs to hear is that this is going to save the company time and money and resources. And those things we're going to continue to push out. We'll talk about them. We're going to get additional news updates about what innovation we're seeing. But it's all about growth. It's about pushing forward, continuing to serve the customer market and penetrate a deeper and deeper percentage of that ever-growing spend that's coming out of US and Canadian government entities who desperately need modern solutions to make them more efficient.
Okay, well, that's it for me and that's it from the audience. So Silas, over to you for any final thoughts, and then we can wrap this up for everybody.
Yeah. Final words is just that I do thank you all for attending. And as I have said for many years now, since taking over as CEO, I take each investment and shareholder personally, and do appreciate the trust that comes with actually putting your money, especially in this market, your money behind an investment. And what I can say is that, we just closed out, our strongest sales quarter ever. And that momentum, we're really just getting started. And I'm very excited, very humbled to be able to lead this company at this time in this moment, because it is really one of those special moments where the market sentiment, the technology, everything is blending together for really kind of a perfect, positively speaking, storm. And we're going to continue to conquer and grow and execute on our plan.
Thank you so much for being here with us today, Silas. I know we haven't had you on in a while, and the update really does sound, quite positive. For the audience, thank you so much for joining us today. If anyone does have any questions that come up later, feel free to email me at victoria@adcap.ca. And then, just thanks again, everyone, for joining us.
Thank you all. Thanks, Victoria, for having me.